Yeah, Wednesday. What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody's had an amazing day. We're about to do what we do each and every day, looking at our futures markets from an educational perspective, identifying both breakouts and reversal trades. So we are ready to roll. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts, the updates, all that fun stuff. And if you're a regular viewer, hit the thumbs up icon. Means a lot. Leave a like, as they say. All right, let's go ahead and get started. Yesterday, we talked about the fact that if there's not a lot to do, don't force it. And that's kind of what happened yesterday. We did get a good breakout in the Russell and in the Dow, but really not a whole lot else transpired. So looking at the S&P this morning, we can see that we've just kind of continued our march higher. And yesterday, we talked about the fact that I thought we might actually come down. We didn't. We stayed up throughout the day. But it was very, very for the most part, right? And that's a technical trading term. And so since we went very sideways, there wasn't a whole lot of good trading opportunities yesterday inside of the S&P. We did get one bump, one nice candlestick that was a bump, but really, in reality, that was a 7 p.m. candlestick that probably most of us weren't trading. And so yesterday was a great day to just patiently wait for price to do nothing. Because that's what it did. It did a whole lot of nothing, and it ranged in this tiny little range for most of the day. So if you practiced patience and you exercise patience, congratulations. You have passed the test. That's what yesterday was all about. It was about exercising patience and not forcing a trade in the S&P. If you forced a trade in the S&P and you decided, you know what, I'm going to try to get in on this thing, I think that I guarantee you that there's some of you out there that tried to buy this area of demand and you got a quick stop out. And there's probably some of us that tried to buy this area of demand and we got a quick stop out. Or this area of supply and we got a quick stop out. My point being is that when the market is chopping that tight, don't go to smaller time frames continuing to look for just a few points. Wait for the big moves. And when the big moves happen, take them, ride them, keep them. Okay? We like I said, we had that one 7 o'clock move that went up. Other than that, there wasn't a whole lot yesterday. Now, I will say that we did put in a bit of an area here of resistance. Old resistance oftentimes acts as new support, and we broke above there and broke through there. So I wouldn't be surprised to see us get a turnaround somewhere around here. Somewhere around there, I wouldn't be surprised to see price turn around and kind of head back up. But ultimately, I don't even think that that's a great level. It's okay, but it's not great, basically because of the time of the day that it was formed. And so if I'm trying to force those positions, I'm going to be probably a bit more hosed. Now, let me throw my volume profile on here real quick. And my volume had me a bit lower than that yesterday. So that's actually going to be that's going to make me take this off because my volume profile had me all the way down here. And if I took my level there with my stop just below and we trade into the volume profile, then I'm going to get stopped out and it's going to go the way I thought it was going to go in the first place. So I'm okay somewhere down in here if you want to try a candle to candle location. Somewhere in this region, if you want to go C to C as a candle-to-candle style of trade, I think that that's a potential. But I'm not looking for a true reversal level anywhere in there. Next, the NASDAQ. Repiten, por favor. That's basically what we're doing. We're just the same thing I just talked about. It's the same thing all over again. We did poke a bit above there yesterday. 6 candles later, we had gone absolutely nowhere. And so if you moved your stop to break even, you're out at break even. If you stayed in the position, you may still be in it for a little profit. But I think it's basically the same thing, that there's not a lot of great levels below us to lean on. This is that 7 o'clock area. And that's 7 o'clock Central Time here in the U.S. where that move occurred, where we could still see a reversal off of that level. But once again, it's not quite as high of probability, primarily due to the time of day that it was created. And you pull back 13,689 to 13,680. Yep, that's the level that I just wrapped around, Afan. So yeah, you're looking at the same thing I am. I just if there's any basing in front of here, it's not going to be worth taking because of the time of day that it was created. The Russell. So our Russell, we did get a decent move out of there. And if you follow the 6 candle rules, 1, 2, 3, 4, 5, 6, then you're still in the trade with your stop at break even. So if you're still in the trade with your stop at break even, great. Let it continue to run. There's no reason to get out of it. If you are not in the trade and you want to say, okay, how can I get back in? What can I do to take advantage of that position? Go to a 5-day. Our time of day here is significantly better, and it's a little wick over wick above a pivot low. It's actually formed at a great time of the day. Okay, so that's in the U.S. market. Right after U.S. market open, about 2 hours past the open, where we have a little rally base and a very nice rally inside of that. Yeah, it is definitely, Liz, you're correct, around the pit close. And it's a strong move away in the NASDAQ. Better in the NASDAQ than in the S&P. All right, and then last is the Dow Jones. So in our Dow Jones, once again, same thing. If you took the breakout trade, 1, 2, 3, 4, 5, 6 candles later, you move your stop to break even. Maybe you're still in it. Maybe you're not. That's okay if you're not. Don't feel like you're missing out because you followed the rules. Now, I will say that here was that same 7 p.m. level from the other markets, but on the Dow, we came close to getting into it, and we were unable to do so. And this little low was unable to create a new high. So I'm going to put a potential breakout area here on a 15-minute chart where we could see price continue to run higher because, being at an all-time high, there's no overhead resistance to worry about a trap level. And we are seeing price move up. So let's take a look at that area for today. All right. So those are our equity markets for the day. Any questions on our equity markets? And then a couple of you, hopefully later in the day, you were able to get the trade worksheets. Let me know if you did not. There's not a whole lot I can do about it, unfortunately. I have not heard anything back yet as far as what's causing the inability to share it. All right. Let me just make sure I have this in place. All right, share our grid. All right. Next, let's move over to commodities. All right, so looking at our commodities, crude oil and gold. So crude oil first. We had a level of demand down here that we almost got into, and we were unable to do so. And then we rallied back up. And then in the overnight, we had a little bit of basing here, and we've just popped above. I'm okay if you wanted to be long on this, even if you go to a 15-minute chart and you want to be long above here, I'm all right with that. I think that's going to be okay. Okay, good. I'm glad it worked this time. Thanks for the feedback. Now, on a pullback, you've got a decent little level right here where I think we could see price come back in and give us a retest. If you get on this 58.75, stop goes down here, your target should be somewhere up just in front of this area of supply, although with our big picture momentum heading up, I don't know that supply is going to stop us anytime soon. Gold yesterday. So gold, we hit the level and got a little move away for about a 2-to-1 reward to risk. Now, remember why we liked this level. Part of the reason why we liked this level was because it corresponded very well with our oops, not the right volume profile. It responded very well to our volume high from the day before, right? So we had our volume high from the day before, and price came all the way down into the level, and then we bounced off of that zone. So that actually worked out really well, and so hopefully some of you are able to take advantage of that little trade, make a little coin on it, as it did give us a nice move away. Then we based in front of it. So what I'm going to do at this point is I'm going to remove that zone. I'm going to remove that area from consideration because it does look like we possibly could roll over and go a bit deeper. Now, if we roll over and we go a bit deeper, then to me, I would look into here as our next stopping point. We do also, however, if we get some more basing, have a potential for a breakout above here. Now, I certainly would need more basing in order to qualify that. Looking at nat gas. So nat gas yesterday, we had this little drop-based drop. Price was going sideways. We came close to it, but didn't get in. And so the level, while still valid, needs to be shifted to a confirmation. And overall, our big picture trend, we got lower than this low. Oh, actually, we didn't get lower than this low yet. So we're still not really big on there. Nice, Lee. I'm glad it worked out for you. All right, now copper. So copper, the other day we talked about a breakout in copper, and it has run hard since the breakout. So those of you that took the breakout, if you're still holding on to it, take your stop, I would say, and move it up under here at this point, under 375.25. So if you took that breakout trade and prices are still running for you, that's where your stop should be, because that's your most recent area of demand. That would lock in a pretty nice profit. If you didn't, and well, even if you did get long and you want to get back in, this speed candle here would be our pullback area off yesterday's pit close. All right, put this one in. All right, looking at our ags, we talked a little bit about these yesterday. And in soy, we had a really decent level that the market said, hey, I'm going to come get you. And then it didn't come get you. And then it just blew right away. So coming that close, that needs to move to confirmation. And frankly, I'm not even super comfortable with confirmation trade at this point. Something tells me it's going to blow right through. As a matter of fact, your better level is probably going to be this one right here. Corn as well, same picture, came close, didn't get in. Better level now is probably going to be a retracement back up into here. And then wheat, good level, blew through, so may have been a small stop out in that trade instead of giving us a quality entry. However, this is the weakest of the commodities, so you might get a better retest on this one right above us. So all three of those had that long lower wick that price came down into, rallied up, and now is showing significant weakness. Now remember, it's going to be easier for price to fall because of that long lower wick. That long lower wick wipes out some orders that happen to be here in the past, giving clean air for price to fall. Now, interestingly enough, is that I'm looking at where is price relative to that low wick, right? So in corn, we're just about right on it. In soy, we're still above it. And then in wheat, we are clearly below it. So that's why wheat, I think, has the closest area of supply worth taking, because its relative weakness is very prevalent. Bean oil. So bean oil, we did get the breakout above here. We had some basing close to the level. Right in here gave us a bit of basing before the breakout and a pretty decent move higher. This is our most bullish of all the commodities, no question. And so if you were looking for a decent long, I think it would come into play right about here as a confirmation. Now, why confirmation? Because we already came pretty close to that area without getting in. Okay, let me share that one. I just realized I didn't have my chat box up, so I got to make sure that there's nothing in the chat window. No, nothing new. So great. All right. Let's move over to bonds and currencies. So looking at our bonds and currency markets, we had nothing in the bonds, and I'm going to still stay with nothing in the bonds. We did have something in the euro, which price came into that level in the overnight. We hit it in the overnight session. We kind of went sideways. If you did get into it, technically you may have been stopped out, although your stop would have to be at its tightest above this wick here, and so you may or may not have been stopped out. At the very least, you are 6 candled to break even at this point, telling me that my supply level more than likely going to fail and should be a confirmation supply at this point anyway. So we would be more inclined to look for areas of demand based upon this 4-hour move up. We still have a good 15-minute level that I looked at weeks ago that I'm going to keep in line here, which I think eventually may be a decent target for price. But if price does indeed come back down, this is my most obvious demand, and it comes into play right here. That I think is your strongest move, and it's not particularly close. So I don't know that we're going to get into that one today, but I do like that area for a potential reversal back in. If price can drop into here, then I think we can see price move higher. And it's a prior area of resistance, old resistance acting as new support. This would be the picture of a fair price value area. Next, the Canadian dollar. So in our Canadian dollar, we've hit it once, we've hit it twice, and now we're basing. We did come back and retouch that line, and now we're bouncing off of it. I think there's still room to get in now if you want to ride the wave, the next leg higher. Just put your stop below this blue line if you want to get long on this, because I think that our next wave is to continue to go up. And so when I look at this on a 4-hour, we've broken out of that sideways price action. We got above those highs. We put a new high in above here. I think it's realistic to believe that our next leg up could get us to this area of supply or even to this 795 area. And so if you want to get in, that's still limited risk, and we're bouncing off this line of support for the next move higher. Let me share this grid. All right, and then last, but certainly not least, bonds and currencies numero dos, New Zealand dollar. So our New Zealand dollar, we have, let's go to the daily, right? The daily should tell us most of what we need to know. We're very range bound. Although we did see that we poked above the range for like a few minutes, which gave me some hope for this little wick over wick level. Now, I will say that's the first New Zealand dollar level that we've picked in probably 2 weeks. And I'm now starting to base a bit in front of the level. So, yeah, part of me wants to keep it on just for the simple fact that I haven't picked a New Zealand dollar level in 2 weeks. But the other part of me realizes that we're basing in front of the level, hence the kiss of death. Kiss of death is basing in front of the level. So I'm going to remove that at this point and wait for a better setup once we get a more defined trend direction. I think that we are going to break out of here soon. I don't know if we'll break out with a tremendous amount of strength, but I do believe that a breakout is inevitable on this thing. All right, Great British Pound. The Great British Pound's continuing to run higher. If I pull this out of the 4-hour chart, we can see that our trend is going up as we're seeing a lot of strength in the pound. So pullback trades are going to be the best way to get involved right now, although our 15 minutes got a nice little opportunity potentially to get in right here, right around the London Open. So I think that would be the best opportunity to get in on a corrective move to rejoin the next impulsive move. Next, we would take a look at the Japanese yen. So Japanese yen, we talked about the fact yesterday that we've switched gears and started to go higher. Nothing has really changed from yesterday, where we have a decent area of demand in here. We're actually basing right in front of it a little bit. So if you wanted to be a bit more aggressive, once again, a bit more aggressive, on a 15-minute chart, you've got two touches. The third touch would be basing in front of the level. You could take a breakdown below here to trade it into this region. Once again, that's a bit more aggressive for a day trader if you're looking for a shorter term move. And then the Australian dollar, We're coming into areas of supply, which yesterday we talked about the fact that that supply didn't look like it was going to hold, and it didn't. Shocker, as it's kind of starting to head back up. And so the next level of demand that's really strong is the wick over wick above the pivot low, and that was the one that we identified yesterday. I don't think that that changes. 4-hour trend is we've got higher swing highs and higher swing lows. We are sitting at this 4-hour supply, but it's not reacting off this 4-hour supply. In fact, we're basing right in front of it, which would tell me that the better probability is that we'll break out from there and then head higher. All right. So those are all of the levels that we have for today. That's all I've got to cover for this morning. Tomorrow, remember, no daily market commentary tomorrow because tomorrow will be our live trade room. And since we have our live trade room tomorrow, there will be no DMC, but we will still be in the live trade room. And remember, starting March 1st, we're going to see a whole new format change. Announcements coming to that this weekend. So this weekend, we're going to announce what that looks like. We're also going to announce about our upcoming Trader Summit. A whole heck of a lot of great things are coming in March, and I look forward to